What does this Bill Gross exit mean for the markets?
Nothing.
Nothing?
Who cares?
Really?
You saw it the other day. I mean, the little bit that was done with the corporate market. So he's there, he's here. It's not going to be that much. So really what means things are fundamentals. So, you talk about a day, 2 days, 3 days, that means something. But long term, it doesn't mean anything. The market is a market. It's bigger than anybody.
So the high-yield market in the midpoint of fair value, the bond bubble, if Draghi undertakes QE, going to blow up. Equities, okay with
what's amazing
next year's earnings.
What's amazing about bonds right now is that you really have negative rates in a lot of Europe in the short end of the curve.
Germany sold for
Ireland.
Negative yield.
Ireland. You know that country? That's where Irish people come from, Ireland. So it's negative there, too. That was a place where it was almost 10%, 10, 15% 2-year yields. So it was one of the countries that people were worried about. There's negative yields in Ireland. So, a lot of these things has been driven down, and it's very tricky. And, you're one big employment, you will go down. Listen, these yields here will come down in the U.S., okay? However, if you're so close to go the other way, that's what makes this a very tricky market. So if you have, listen, if you have big employment numbers that take you into the fives, it's going to start worrying the Fed about labor pushing inflation at some point. And if you do get inflation in Europe to stop going down, inflation stop going down, or deflation look like it stopped taking hold, at the same time, you'll have the market's yields turn up here. So it's tricky. And until that happens, you could have pressure on yields down. So, the question is there enough, are you getting paid enough for the risk, in any kind of place in the yields? Because there's a lot of chances to lose money.
Where are you getting paid enough?
Listen, I think here's a great segue, Where you're getting paid enough, you're really getting paid enough. If you look at the curves of how things are trading in the world, you go from, bonds, which are probably too rich on any kind of economic growth, to the United States, which looks kind of cheap based on, not on a 4% yield, it looks kind of right, but maybe cheap on where yields are trading. Then you go down to, Japan and Europe, which are pretty cheap on the yields they're trading. I mean, you're trading 12 multiples.